I know you all have a hectic day. I won't take much of your time. So basically, we are all interested in trading gold, and especially during inflationary environment. Like, the prices are crazy right now, all over the world, in all of the countries. The assets, the everything. Like, if we go to the supermarket, the prices are going like crazy during this inflation. So basically, in the MENA region especially, our sentiment in case of, like, let's say, Arabs or Indians, we have sentiment for gold. We think that gold is always going to surge or go up, all right? But this is not the case. When we talk about inflation, most of the traders or investors, they think of gold as an anti-inflationary hedge, and they think that the gold prices should go up. However, when we talk about high inflation, we discuss central banks. Central banks' decisions, central banks' tightening policies, raising rates, raising interest rates, and reducing the liquidity from the market. So actually what we are looking here, I took this chart in which we had the highest inflation during some decades or number of years. So if we look back into 1940 to 1949, we see that the inflation was trading near 5.4%, which was actually back then its high. When we look at 1970 till 1979, we see that inflation was 7.4% actually, and it was a high inflation at that time. When we talk about 1990 as well, 1980, 1989 as well, high inflationary periods. So I would like, out of curiosity, to see how was gold performing during these times. So when we look into gold, during the 1970, 1979 inflation, the gold is in the yellow. The gold was outperforming the commodities as well, real estate investment trust as well, and the inflation rate was high. But we look into the other two brackets, we can see that the gold yielded negative. That means during high inflation period, 2 out of 3 times gold was going down, even if the inflation was going up. This is interesting numbers. So actually, not every time you hear about inflation and prices going up, gold should go up. So if we dig more into details, I will not talk about these numbers and deltas and R squares, but when we see the CPI, which is the consumer price index, or the inflation going up, this is not the direct correlation between the inflation and gold. However, the gold was yielding up because of an economical crisis or a geopolitical tension. So gold have positive correlation and move directly with geopolitical tensions, war, and global economic crisis. Like if you go back to 2008, when we had the Great Recession, gold yielded negative from $1,000 an ounce to $600 and then went back again up. So right now what's happening is there's high inflation, there's tightening in the central bank policies, we're witnessing higher interest rates in the US and in EU, from Bank of England, Bank of ECB, from the Federal Reserve, higher interest rates. That means the yields or the return on bond market is going up. However, when the yields on bond market is going up, that means a crash on the bond market itself. So the bond market goes down. How can we go back? Bond market goes down, the yields go up to be more interesting for investors to go back to the yield market or to the bond market. So gold goes down. This is the correlation. This is the normal correlation you can see. In this chart, you can see that the yields on bonds are negatively correlated with gold. So the one in red, So the one in red is the gold, and the one in blue is the yields. So whenever you want to know if the gold is trading near an interesting area to buy or not, you need to look at the yields, the US yield especially, okay? and see the inversion or the negative correlation between yields and gold. Okay? Because I'm an Elliott wave trader, so I wanted as well to analyze a little bit the gold as a technical analysis part. So most of us right now should ask me, or might ask me, Joseph, should we buy gold now or not? So I did the chart, which is like a short-term chart on Elliott wave analysis, and I did a longer-term chart, which is the next chart after this. So actually what we are seeing here, the 2075, this top right here, which is labeled as B, is when Russia invaded Ukraine. We saw a surge in the gold. It reached 2075, almost double top, all right? And then we started to see gold going down after the tightening policies from the Federal Reserve and the higher interest rate and the up market or the surge market of the yields and the crash of the bonds. So gold yielded negatively. However, I'm trying to count this downfall as a correction. And in Elliott wave, when we talk about correction, we talk about three waves, which is a W, X, and a Y. Wave Y contains 5 waves. So it's a W, X, and wave Y contains 5 waves, which is 1, 2, 3, 4, 5. I do think that gold now might bounce back for a correction if this low is not broken. So basically, wave B, gold can still go down. Actually, gold now is here, 1630, 1628 at the moment, right now, or 1632. So actually, gold now is doing wave B. I still think that if this low is not broken, we can see a wave C up to 1800s to retest the previous top, and then we might go down again. If in November, the Federal Reserve raised the rates by 75 basis points. True? So I still believe that this scenario is going to happen, and today I'm scalping a little bit of long positions on gold during the day here at the Expo. If this level was broken, the invalidation level, which is the 1614 level, if it was broken, we are looking into a more general correction or a more complex correction. So this is my Elliott waves on a weekly or monthly chart. I still think that in 2011, when gold reached 1,924, this is a wave 3. And we went down into $1,000 an ounce, wave 4, and now we're going into a wave 5. That might reach 2,300 or 2,690 on gold as a first and second target. So there's more room, room to go up for gold in the coming months. However, now the correction is a little bit complex when it comes to Elliott waves. So when we count the waves, we are going into a big A, B, C down. If the 1614 is broken, the next level to hold is at 1560, which is a very important level. And I hope we don't see below 1560, because if 1560 is broken, the complex wave might go down into 1421, which is the 161.8 level. I still buy gold, but as a scalping, you go back to the previous chart. If you tell me now, what would I do, Joseph? I trade this. I buy gold with a stop loss 1614 with a target 1800s. If gold broke the 1614, I go out. I wait for the 1560 level, and if the 1560 level holds, excuse me, if the 1560 level holds, and we got a reversal candle or a signal that might give us a little bit of a sign that we will turn positive, we might hit the gold and go long. If not, we might wait for the 1421. All right? So these charts are based on Elliott wave analysis, which I do since 6-7 years ago till now. We combine Fibonacci and Elliott waves together. This is what I love to do. It's a little bit complicated, but it can give you a clear detail and a clear vision about what we can expect from gold or any other currency. So if you would like to see like more of Elliott waves on gold or on euro, any currency, just visit me at booth number 72 TICKMILL is the name of my company. Okay, we can go back to see, for you to see the logo maybe. The logo is down here. So it's TICKMILL in red, all right? Booth number 72. It's next to equity, all right? Thank you so much for listening. It was my pleasure being here today. Joseph DAHRIEH, thank you so much. Okay.